Let's understand the other important concept which I earlier also shared with you with the help of an example. Pro rata allotment. Pro rata allotment is made when there is oversubscription, and how the amount is to be used by the company at the different stages. Let's understand with the help of this example. I read the statement. AB Limited invited applications for 1 lakh equity shares of ₹10 each, payable as 2 on application, 3 on allotment, and the balance on first and final call. Applications were received for 3 lakh shares and shares were allotted on pro rata basis. Now, first of all, understand that company had invited the applications for how many equity shares? For 1 lakh shares. Now the applications are received for 3 lakh shares. So obviously, automatically, it is a situation of oversubscription. And issue is oversubscribed how many times? It is oversubscribed 3 times. Company invited applications for 1 lakh shares and applicants applied for 3 lakh shares. Now, company had made pro rata allotment. Pro rata means proportionate allotment. But the basis company will take that as the issue is oversubscribed by 3 times, so all those who had applied for 3 shares, company will allot them 1 share. So the basis will become, the ratio will be 3:1. It means all those who had applied for 3 shares, they will be allotted only 1 share. Ratio is 3:1. So what the journal entries will be there? Here, first entry will be bank account debit to equity share application account, that is 3 lakh shares at the rate of ₹2 per share application money. ₹6 lakh will be shown in the bank account on account of share application account. Now very clearly it is mentioned that the excess application money was to be adjusted against allotment only. Sometimes the application money is surplus and company use this money for the successive stages, that is allotment and call stage. But here the statement say that the excess application money was to be adjusted against the allotment only, which means that if there is any surplus money left out over and above to the allotment, that will be refunded by the company immediately at the stage of application. Company will not keep itself any extra or surplus money which is access to the allotment stage or allotment money. So here how the journal entries will be recorded. First, bank account debit to share application account. 2. Now the second entry will be recorded, very important, very simply, that is equity share application account will be debited with 6 lakh to share capital account with ₹2 lakh. How this 2 lakh came? That is on 1 lakh share at the rate of ₹2 per share of application, because on application company collects ₹2 per share. So automatically 1 lakh share multiplied by 2. So share capital will be credited with ₹2 lakh to equity share allotment account, that is with ₹3 lakh. How this 3 lakh will came? That is they had applied, application received for 3 lakh shares, application money received 6 lakh. How much money is needed for application? That is 2 lakh on 1 lakh share at the rate of ₹2 per share. Surplus is ₹4 lakh. What amount is required for allotment? Rate of allotment is ₹3 on allotment. On 1 lakh share it amounts to 1 lakh into 3, that is ₹3 lakh. So the share allotment account will be credited with ₹3 lakh to bank account, that is the surplus money will be refunded, that is ₹1 lakh. As I told you, as per the statement, it say that company has to use the surplus application money against allotment only. It could not take beyond the allotment. So the allotment money comes ₹3 lakh and the excess is total 4 lakh, 6 lakh minus 2 lakh. So out of 4 lakh, 3 lakh will be used for allotment and remaining 1 lakh will pass on for the next stage, that is the call stage. But here company is using only up to allotment, so that surplus 1 lakh will be refunded by the company at the application stage itself. Now the next stage comes to the allotment. Now next entry is equity share allotment account debit 3 lakh to equity share capital account. On allotment, how much money is due? On 1 lakh shares at the rate of rupee 3 lakh is due. So we will write here to equity share allotment account debit to equity share capital account with rupees 3 lakh. Now next entry will be bank account debit to equity share allotment account. You would find here that there is no entry like that. Why? Because here noted down that in the second entry, equity share allotment account is credited with rupees 3 lakh. In the third entry, how much allotment money is required by the company? 3 lakh. So automatically the whole amount being received. So there will not be any entry for the bank account for receipt of the allotment money. I once again repeat, here the total allotment amount due is rupee 3 lakh. The allotment money already surplus received at the application stage in the second entry is 3 lakh. So automatically it will be adjusted by that. So there will not be any bank entry relating to the receipt of the allotment money. Next stage is first and final call, that is with rupees 5. 2 of the application there, 3 on the allotment, remaining money is rupees 5. So share first and final call is rupees 5 lakh to share capital 5 lakh, 1 lakh into 5. Next entry is bank account debit to equity share first and final call account, and this entry is for what? This entry is for receipt of the first and final call money. Now again understand and read the statement. What statement say? M, a shareholder who has applied for 3000 shares, failed to pay the call money and his shares were forfeited. Very, very important thing here, you have to calculate how much money has not been received from M. How you will calculate it? You have to see for how many shares he has applied, how many shares he has been allotted, and what the surplus of that shareholder is. If you had the register, then note it down how the amount will be calculated from M which is not received. Here again go through to the statement. A shareholder who has applied for 3000 shares. When he had applied for 3000 shares, how much money he has given for application? 3000 into 2, that is 6000. Now how much money is needed at his application? That is, how many share been allotted to him? 1000, because we know that his ratio is 3:1. So he has given the application money on 3000 shares at the rate of rupees 2, that is 6000. Now how much money is required on his share? That is 2000 only, because he has been allotted only 1000 shares. On 1000 at the rate of rupees 2, 2000. How much is application money surplus left out? That is 4000. 6000 minus 2000. Now that surplus application money company has utilized at which stage? That is at the allotment stage. Now on allotment, how much money is required from M? M been allotted only 1000 shares. Rate of allotment is rupee 3 per share. So he been required to pay rupee 3000 on allotment. His surplus was 4000. Out of 4000, company had adjusted his allotment money also, that is 3000. Again, how much surplus is left out? That is 1000. Totally he had paid 6000. 2000 of the application adjusted, 3000 of the allotment adjusted, 1000 will still left out. Now where that 1000 will be adjusted? That will be adjusted at the stage of first and final call. Now total first and final call against the share comes out rupees on 1000 shares at what rate? At the rate of 5000. His already surplus 1000. So how much amount company has not received on first and final call? That is rupees 1000, 5000 here. So here the bank account will be debited with 4,95,000. Total call money due against his share is 1000 into 5, that is 5000. His surplus being refunded by the company 1000, because company had used the money only up to allotment. So from this shareholder, company has not received 5,000 on 1,000 shares at the rate of 5. So what is received in the bank? Out of total 5 lakh, 5,000 not been received on 99,000 shares at the rate of rupees 5. It amounts to 4,95,000. Now the company will forfeit his shares. How many shares he is having? That is 1,000. So share capital account will be debited with rupees 1,000 into 10. Here it is mentioned 100 wrongly. 1,000 into 10, 10,000. To share first and final call account, the amount which is not being received on 1,000 shares at the rate of rupees 5, it is 5,000. Share forfeited shares account will record the amount which is received against these shares. Rupees 5 being received, here by mistake it is mentioned 50. On 1,000 shares at the rate of 5, it amounts to rupees 5,000. Narration being 1,000 share forfeited for non-payment of first and final call account. So entry will be equity share capital account debit with 10,000. To share first and final call account with 5,000 amount not received. To share forfeited account, the total amount which is received against these shares, that is 5,000, 2 of the application, 3 of the allotment. Now further understand the statement. What happens? And his shares were forfeited and reissued at rupees 8 per share as fully paid. Now company has issued his shares of 1,000 at the rate of rupees 8 per share as fully paid. What it means? That company is giving a credit of face value of rupees 10 per share, but collecting from him rupees 8. So the person to whom the reissue had been made, he had paid at the rate of rupees 8, and 2,000 will be the loss of the company that will be adjusted from the share forfeiture account. As in the share forfeiture account there is profit, because share forfeited account include what? The total amount which is received against the share, that here is shown 5,000. The reissue entry will be bank account debit with rupees 8,000, the amount which is received 1,000 into 8. To share capital account in the credit 1,000 into 10, that is 10,000. Loss is rupees 2,000. That will be adjusted from where? That will be adjusted from the share forfeiture account, that is a profit of rupees 5,000. So share forfeiture account will be debited with rupees 2,000. Now amount left out in this account is 3,000. Profit is of 5,000. Loss is of 2,000. Now the remaining amount of share forfeiture account will be transferred to the capital reserve account. So here the entry will be share forfeiture account debit with 3,000 to capital reserve account with rupees 3,000. So this way automatically the journal entry will be recorded. Now if the reissue is made only a part of the shares, then in that case proportionate amount will be calculated. For example, company had reissued only 500 shares. Then on 500 share we will calculate the proportionate amount, that comes out to rupees 2,500. Again the loss will be of rupees 1,000. Then 1,500 will be transferred to the capital reserve account, and remaining 2,500 of the 500 share which are unissued will remain in the share forfeiture account. So dear students, this way we have to record the journal entries in case of the forfeiture of shares, and automatically we have to transfer the amount in the capital reserve account. So understand once again that if proportionate amount or reissue being made only a part of the share, then we will calculate proportionately the share forfeiture amount, and again we will transfer the difference. Remaining amount will be shown as it is in the share forfeiture account. So dear students, I hope you would understand how the journal entries will be recorded in this case when the forfeiture of shares issued at par, at premium, and reissue being made, and how the amount will be transferred to the capital reserve. Dear students, I request you kindly attend to the live classes, because in the live class I will share with you all your doubts and problems relating to the forfeiture of shares, reissue of the share, transfer to the capital reserve. Thank you very much. Have a wonderful